Hello everyone, and welcome. Today we're going to talk about one of the most important parts of your HOA's financial health, the reserve account, your community's financial safety net. Think of a reserve account as the HOA savings account. It is money set aside for major repairs and replacements, the big costly projects that keep your community in great shape. We're talking about things like replacing the roof on the clubhouse, resurfacing the pool, or doing a major landscaping overhaul. By building and maintaining a reserve account, your HOA can pay for these projects without having to suddenly raise dues or issue special assessments that put unexpected financial strain on homeowners. When a reserve account is well managed and adequately funded, the community's infrastructure and amenities are protected. It also shows that the HOA is being responsible and planning for the future. Professional reserve studies help assess the condition of community assets in common areas, their expected lifespans, and the cost of eventual repair or replacement. These studies give the HOA a clear picture for how much money should be saved each year to keep the reserve account healthy. Without a strong reserve account, your HOA is at risk. Unexpected repairs could force the board to issue a special assessment, take out a loan, or look to other financing. It can also hurt property values. Prospective buyers often review an HOA's financial situation before deciding to purchase. A weak reserve fund may make buyers hesitant, while a strong one signals stability and good management. So what should you do to determine if you have adequate funds in your reserve account? Step 1. Conduct a professional reserve study. This tells you what you own, how long it will last, and how much it will cost to repair or replace. Step 2. Make regular contributions. Incorporate reserve funding into your annual budget and collect those funds along with your normal dues. Step 3. Invest wisely. Reserve funds should balance liquidity, the ability to access the money when needed, with reasonable growth potential. Think CDs. Step 4. Review regularly. Update your reserve study every few years to make sure your contributions are keeping pace with real costs. Some might believe reserve funds are optional or can be used for any expense. They're not. Reserves are legally and ethically dedicated to major repairs and replacements only. Others think you can fully fund a reserve account once and then forget about it. But inflation, wear and tear, and changing costs mean you have to keep contributing and adjusting. Some assume that a large reserve fund means the HOA is overcharging its members. In reality, it's a sign of good planning, and it helps avoid those dreaded special assessments. A healthy reserve account means financial stability, consistent property values, and well-maintained amenities. It gives residents peace of mind, knowing that when the time comes for major work, the funds are already there, no sudden hit to the wallet. It also signals to future buyers that they're joining a community that's well-managed, financially responsible, and committed to preserving its quality of life for years to come. So remember, a strong reserve account isn't just a line item on a financial statement, it's the foundation of a thriving, well-cared-for community. For more topics like the reserve account or any other HOA practices, check out our Board Member Success Guide by visiting www.foresightpm.com. See you in the next one.